Hello traders, welcome to this video where we are going to be taking a look at absorption. We are going to cover what absorption is, we're going to look at the two main types of absorption, and we are going to go over how you can use absorption to gain an edge in the market and to make better trades. As with all of these videos, there is no trading or investment advice within this videos. These are purely for educational purposes. Now, as absorption is an order flow concept, then it is important to be able to understand the footprint chart. If you do not understand what a footprint chart is, then please do go and check out my exocharts video series that will help you get to grips with the basics. Within some of the examples that I'm going to show later on in this video, I am using a very simplified version of the chart here that is using our volume or trade count. We're using a delta ladder and we're using imbalances. Okay, so what you can see here is these red dots and these blue dots that you see on the chart are showing your selling imbalances and your buying imbalances, and then these shaded sections are showing your negative delta and your positive delta. So what is absorption? Okay, absorption is when passive limit orders limit the impact that aggressive market orders have on price. They are where larger traders and liquidity providers are most likely to step in, and they will step in at or near main reversal points where there is high volume or high liquidity that is a point of interest within the chart. Absorption is taking place when the price impact of aggressive participants reduces drastically or is no longer making progress. So let's take a look at an example of this. Price has moved in this uptrend and you have identified a level of support that you are interested in trading. Price comes down. Okay, the aggressive participants are moving price in a downwards direction in towards that point of interest that you have on the charts. Now this is where absorption becomes important, okay, because if at that stage you have a very thin order book and you are not hitting in too many bids, then what you are likely to see is a lack of absorption. You don't get that absorption effect, and price, yes, may get a small reaction off of each of these levels, but eventually that directional push from the market participants, from the aggressive participants, is able to continue that push in that direction and you eventually trade through it. Now on the flip side, let's say price comes down and you come into a really nice thick juicy order book. Okay, you can see that cushioning effect, the mattress that's there. You start hitting into bids. Okay, you start hitting into bids and you're not able to get that same effect. So what the bids are doing here is they are absorbing the impact of the market sells into the bids, and they are reducing the directional impact that those market participants have on price. Now what this quite often leads to is that this starts to bring in confidence from the larger traders that price is holding here. It gets absorbed, and then you often see that move back in the other direction, creating that pivot and continuing with that uptrend. So that covers the basic concept of absorption. Okay, if price is moving down, then you want to be coming into enough bids in order to absorb the market participants there and continue higher in price. And on the flip side of that, if price is moving up and you want to be taking a short position, you want to be coming into enough asks or offers to absorb the market buys and be able to move price back down. But there is a big difference here as to whether it is a continuation trade or a reversal trade, and this is where the two different types of absorption that I mentioned earlier become very important, and it is important to be able to distinguish between the two of them. So we have two types. Okay, you have exhaustion absorption, which is probably the one that you most often see traded and the one that you most often hear about, and then you have momentum absorption, which is a very different concept altogether. So let's start with exhaustion absorption. So this is where passive orders are taking the full impact of aggressive orders, absorbing their flows and stopping momentum before a pivot or a reversal. They are often high in volume and heavily imbalanced in delta. They usually occur around previous high volume areas or very important points of interest within the chart, and usually they will create divergences that can give you another layer in which to trade off of. This will often lead to a change of character or a change in market structure. Okay, so it breaks a downtrend and starts to form an uptrend, or it breaks an uptrend and starts to form a downtrend. And I've got our little mascot here for the exhaustion absorption as a mattress. Okay, it is basically like price coming down. A mattress, if you are falling and you're falling into this mattress, basically it is completely absorbing price, and often you can get a little bit of a bounce off of that, or at least you can pick yourself back up. Now momentum absorption, on the other hand, is where passive orders are chasing price in the dominant direction and preventing a reversal. They are dynamic in nature, so they are not static orders, but they are constantly moving. So this is something that's more useful if you are scalping or if you are a momentum trader. If you are looking at the layer 2 order book, then you can use things like the DOM or the order book in order to identify pulling and stacking. So let's say as prices is moving down, and you can see consistently on the ask side, on the offer side, that the passive participants are continuing to stack orders just above price, then that is a sign that you are seeing momentum absorption. Okay, so what this does is it absorbs counter trend ticks. So if you are moving down and price ticks up, you'll see that stacking, that absorption of the uptick in price, and then you'll get that continuation back to the downside. And as with that, it will follow in the direction of the market and will prevent a change in market structure. Now for this, I've got the little mascot here of the dog chasing the postman, okay? He's not going to be able to turn around. He's not going to be able to run in the other direction. The dog's chasing him down the street. So two little analogies there that you can use. The mattress, the springy little mattress that can help bounce you back up, or the dog is chasing you down the street or up the hill. Okay. So let's take a look at this on our footprint chart. Okay, you can see some clear examples on the chart here. Now, first of all, you have a downtrend. Okay, you can see price moving down, increasing in momentum to the downside, and then you get high volume with heavy negative delta and selling imbalances at the bottom. Now, this is where you get your exhaustion absorption going on. Okay, you have high volume, you have high negative delta, you have high imbalances at the lows. That acts as that cushioning effect in order to bounce price back up. So that is what you get down at the lows. All of those things coming together there at those lows in what would have been an important area of the chart with high volume associated with it. Price then gets that bounce, and you can see each time here on these back ticks, okay, as price comes back in to these high volume, high delta areas, price back ticks into that, you get selling imbalances, negative delta at the lows, and price continues to move higher. Once again, it moves down, you get those selling imbalances, that negative delta at the lows, and price then moves up again. Again, as we come back down, you get those selling imbalances, the negative delta on those lows, and price continues to move higher. So at this stage, you've had that spring-like effect, that bouncy effect of the exhaustion absorption, and then you are starting to chase. Okay, the dog is chasing that postman back up to the chart until you can get that pop back up, and then you repeat the process in the opposite direction. So then what you get at the highs is once again high volume up at the highs there with heavy positive delta and buying imbalances. So there is more buying going on at the top than there is selling, and that leads to that selling absorption. Okay, that exhaustion absorption to the on the ask side on this occasion. So now what happened to our mattress at the bottom there in order to bounce price up? It is now acting as a little cushioning effect at the top of the ceiling to prevent us from smashing through that ceiling, and then price can move back down in the opposite direction. So then, as with the same thing, the dog starts to chase that postman back down the hill. Okay, on every little uptick, you get those buying imbalances up at the top on positive delta. You move down, imbalances, buying imbalances on positive delta, and then you tick back up, same thing, buying imbalances on positive delta, and then you continue that downtrend and that reversal. Okay, so hopefully that is a good example there where you can see clear high volume with high delta. As a bounce, price gets chased, again high volume, high imbalances, high delta on the upside, and then price gets chased back down. If you enjoyed this video and you found it informative, then please do hit that like button and consider subscribing if you have not done so already. Also, please do go check out tauruscrypto.com where you can find out more about our community. Within this community, we do have the crew section. Now, this is where myself and the coaches, we do daily live trading sessions. We have a ton more educational content on there, and we have a really amazing community. So if you are looking to invest in your trading and you are looking to trade with other professional traders, then please do check out the website and do consider joining us. Thank you so much for watching. Have a great day, and I'll see you in the next video. Cheers.